the subscribe button if you're watching this on YouTube, or, make sure you hit the follow button if you're watching this on Facebook. So guys, it is Aslam Du Toit, and, I decided to start doing some videos in terms of, experiences that I have, with my property endeavors. So for those of you that have been following me for a while, I don't do many videos around real estate or property, but I do have a lot of experience, in this particular arena. You'll see most of my videos cover things like online marketing, building a business online, in investing in things like cryptocurrency. But at the heart of it all, at the foundation of it all, is this desire to create multiple streams of income through multiple investments. So to give you an idea, I've been investing, for example, in the stock market. I've been buying shares on the stock market probably for the last, what is it now, man, 13, about 17 years investing in the stock market. I probably bought my first investment property back, it's almost 19 years if I think about it now, my first rental unit, and what basically happened, I got rid of a lot of the residential stuff that I had owned. I was buying in areas that, I wasn't really excited about anymore. So I got rid of all of that. I also, have owned various businesses, things like franchises, which I thought would be passive income because they were franchises. So you think it's sort of a hands-free business model, but it isn't. And I also worked, in commercial property finance as a banker for about 12 and a half years, structuring transactions ranging from, shopping centers to hotels to large-scale multi-phase residential developments, student accommodation, you name it. In the commercial space, I've probably, funded, I've probably assessed thousands, literally thousands of transactions, varying in size from as small as a couple of 100,000 all the way up to multi-billion rand portfolios. So I got a lot of experience in that. And when I left banking, I decided to focus more on the digital, the digital aspects of my portfolio, because I do believe that building online digital assets is also a form of passive income. So all these things basically have one goal in mind: create passive income sources, multiple passive income sources, and it's all part of a greater goal. I'm looking at my whiteboard right now, and it has all these things on it, ranging from things like real estate to cryptocurrency to share portfolios to royalties, anything to do with passive income. In terms of real estate, for obvious reasons, typically when you sign deals, you can't really speak much about them. So I've always withheld, a lot of the information that I have, or experiences that I have, because sometimes I can't show the properties that I'm at, or discuss, exactly what I'm doing. But, after an experience I had yesterday, I decided, what, even when deals don't work out, there are learning experiences that probably someone else could learn from. And I'm hoping these videos will, stay online for someone to find value from them sometime later. So make sure you're hitting subscribe on that YouTube channel. I'm going to start a new segment on there called the Property Chronicles under my 9 to 5 Millionaire brand. And I just want to basically highlight some of the experiences that I have pertaining to property deals that I'm working on. I'm always, even if I don't speak about it online, I'm always working on real estate property transactions, mostly in the commercial space, not so much on the residential side. I decided not to get into, residential type of investments. I'm slowly starting to really look at that, but in a completely different way, more on a development side. So, watch out for that. I don't want to say too much about that, but hopefully that's coming soon. I've been trying since I left. It was very difficult for me to start acquiring commercial assets while I was still working, in the bank doing commercial property finance. So I left the bank back in 2019. And since then, I've been trying to close some commercial property deals. Needless to say, definitely not easy. Some deals been working on them for a long time. And the larger they are, the more difficult and time consuming they tend to become. Okay, so let's get into the topic for today. I'm going to call this episode 1 of the Property Chronicles. You know, you'll see the branding and things on the YouTube channel when it hits. And I want to speak about 3 tips that every property investor should be aware of, or 3 tips every aspiring property entrepreneur should you know, apply when trying to do a transaction. Now, understand, because I do mostly commercial deals, some of what I speak about might not be applicable in the residential space, because the offer contracts tend to be very, very different in the commercial space. They are, you know, a lot more complex at times. And more often than not, when you're buying a residential property, it's like the agent gives you an offer to purchase, and you typically, most people think, well, I just have to sign that particular offer to purchase. And classic example, you know, with a property where we just put an offer in, you know, the estate agent insisted that I use their template, and I said, I want to use your template because your template is catered more towards you know, residential buyers. I'm a commercial buyer, so I prefer using my own. It's a sale of rental enterprise agreement, you know. And when it actually landed on the attorney's table, he looked at the agreement and he was like, wow, I'm really impressed with this agreement. You know, it's very well drafted, you know. So clearly we know what we're doing, right? Okay, so some of what I speak about, if you're busy in the market and you're trying to, you know, do property deals. I'm also doing these videos because people reach out to me at times asking me for advice in terms of property and raising funding. And it's very, very difficult for me to always assist people. So that's why I'm also doing these videos. Okay, so I want to cover 3 things that I basically experienced with 2 property deals that I worked on, both commercial, and both in excess of probably 50 million, north of 50 million, you know. And these transactions, the one we've been working on probably since the beginning of the year, I think. And the other one is closer to maybe 18 months, maybe even 24 months. And both those deals folded or didn't go through yesterday, eventually, you know, so there was some heartbreak there. But, you know, on the third one, it seems like that one might be going through. So the first thing I want to speak about is, you know, always have a due diligence clause in your agreements. Okay, so number 1, always have due diligence clauses in your agreements. Now, some of you might just be buying a townhouse and you want to invest in a townhouse. So you don't really need a due diligence clause. You might just want to go and check out the property. But in the commercial space, due diligence clauses are extremely vital. And what is a due diligence clause? Well, after you sign and make an offer to a seller, you are giving yourself time to assess aspects of the property, you know, the property deal, so that you are certain that what you are buying or what they are offering you is indeed what you will be receiving once you take transfer of the asset. And I cannot begin to tell you how glad we are that we had a proper due diligence clause in an agreement where we were attempting to buy a fuel site. You know, that it was partially completed and we still need to complete it. But what basically transpired was a lot was said to us that was, you know, incorrect, potentially even bordering on lies, you know. And had we not had these due diligence clauses or this due diligence clause in our agreement, we could have potentially been burned in a really bad way, you know. So I'll give you an example. There's a building on the site. There's a structure on the site. And once we started, it was already a worry for us when we were struggling to get the information from these people. And lo and behold, we come and find through the due diligence that the property or the building on site actually has no approved building plans. Okay, now, if you know anything about property, you should know that is a big red flag, right? So no building plans, which means the building is technically illegal on the site. Okay. And we didn't know, I mean, we didn't know this. Normally you wouldn't start building until you've got your plans approved from the council. So what that means is that the city council could literally come to that property and break down that building. Okay, which is crazy, right? I actually saw that happen while I was working in a bank, where a particular property, a client was extending a shopping center, and he had approved building plans, but what he had done, he actually changed the design of the building. As he was building, he decided, well, I'll not put that there, I want to change that around, right? And it was some significant amendments that this person had made on this asset. And what then happened, and remember, this asset was on the bank's book, it was funded on the bank's book. What basically happened was the city council came and they broke down that entire alteration. And I'm not talking like a small 200 square meter alteration. This was a multi-million rand alteration that the guy did. And they had to literally break down a portion of the center. Okay. So that is how serious it is if your building plans are not approved. Another thing that basically came out was it was advised to us, because this was an incomplete site, we were given figures showing that it would potentially cost about 6 million to complete the site. Okay. And we factored this in when we were making an offer. Lo and behold, after doing the due diligence, we find out that the actual cost to complete the site is more like 24 million. Okay. So this was obviously a massive difference. And we said, well, that means we need to reduce the price on this, or we need to walk away from this deal. Another thing that we were told was the bulk service contributions, because this was it's a large site. Okay. The bulk services contributions on the site, we were explained that it was about 2 million, and we found out it was more like 64 million rand. Okay. And what it culminated in was a meeting yesterday with the sellers, and needless to say, it became quite heated, where we basically decided to walk away from the deal, and we shook hands, and that was the end of that. But this leads me into point number 2. So point number 1, make sure you have a due diligence clause. And on the due diligence clause, pro tip that I learned from someone in the game: if you are putting a due diligence clause into your agreements, right, normally you would put like 14 days or 30 days. It just depends on the asset type that you're buying. And normally that due diligence clause, the moment you sign that agreement, the due diligence clause kicks in, and now you're in your due diligence period. What we've always now done, after I learned this trick, was the due diligence period only commences. Okay. It only commences when we received all the documentation from the seller. So we basically put that sort of clause into our agreements, so that the day we sign, the clock hasn't really started ticking just yet. We give the seller a certain period within which they need to give us certain documentation. And if they don't give us one stitch, or if there's one little bit of information that they do not give us, guess what? The due diligence period actually has not begun, because we can go back and say, well, we asked you for all these documents and you haven't given us any of this. So that's really a pro tip. That's worth $1 million right there. Okay, so make use of a due diligence clause if you're signing agreements. If you're doing your renovations or fix and flips, you might want to have a due diligence clause, in your agreements. Point number 2, okay, minute every single meeting you have with agents and sellers and lawyers. And when I say minute, if you're sitting around the table having a meeting with people, after that meeting, and we didn't do this, and that's why this thing exploded yesterday. Okay. If you minute the interaction, so let's say you have a meeting today, and tonight you go home, even if no one asked you to do it, minute everything that was said in that meeting, and then submit the minutes, send it back to everyone and say, this is what was discussed. These were the facts that were laid on the table, just so that everyone has a record of that. Because, when we basically put our cards on the table and said, look, this is what we've discovered through our due diligence, it was basically said that we told you this and we told you that, and the truth is, it wasn't told to us. That was all lies. So we didn't, there was no money spent or anything like that, but I didn't really have a leg to stand on, because I hadn't minuted, okay, what was said in some of these meetings. So it was a he said, she said sort of scenario, and that's why things sort of blew up unnecessarily when viewed in retrospect. And that could have been avoided had we minuted every single interaction that we had with these people, be it emails that were exchanged, or be it telephone conversations or in-person conversations. You want to make sure that you minute all of that, send it to all the parties involved, just so that everyone has it on file. Okay, so that you have a very good leg to stand on if things come back. Okay, and then point number 3, you want to stick to your price, or you want to, you want to stick to the price that you've determined, or the value that you've determined for that property. And this takes me to the other deal that we were working on, which was a completely different asset in a really good area, and awesome lease in place, long-term lease. That's why we were going after this property, because I changed my focus from residential, and I said I want assets that have less headache in terms of rental income, because my thinking is, well, if I've got a commercial asset where I've got a long-term lease and it's with a large company, okay, stable company, I shouldn't have any headaches about collecting rentals or fixing the toilets and that sort of thing. So this was a triple net lease where the tenant basically takes care of everything in the building. You literally don't have to do anything in the building, or we would not have had to do anything in this building. And the original asking price on this particular property was 65 million. And what basically happened was we submitted an offer that was probably about 10 million lower. And the offer was declined. And they said they had a higher offer at the time, and we left it. And this was several months ago. And the reason why I'm saying number one, stick to the price, is because we believed in the number that we had come up with. And guess what? The deal that had been signed at the higher price didn't go through. And guess who they came back to? They came back to us to see if we were still interested. And we then pursued a discussion, which culminated into the deal not going through yesterday, because after once again doing due diligence and assessing and speaking to banks, we found certain issues, and we needed to reduce that price a little bit more after. So what's nice about a due diligence is once you confirm a price, right? If anything doesn't stack up, you have a leg to stand on, where you can say, well, you know what, we've done a due diligence and we found out XYZ. So we don't think the price should be 1 million. We think it should be 800,000. Okay, and if the person and you need to state your facts, obviously you put your facts on the table, and hopefully someone will then see that and say, okay, this makes sense. I see your point, so I'm prepared to drop the price, or I'm not prepared to drop the price. And it was the latter in this case. But what basically happened or transpired was we were told that there was once again a higher offer on the table, and if we wanted to continue with the deal, we needed to match that price. And we said, look, we don't want a horse trade. We believe once again in our price. So we're going to stick to the deal that we believe is a good deal, and the value that we believe is a fair value on this particular asset. And we haven't moved from that. If we lose the deal, which it seems we have, then, I mean, so be it. But, I would rather buy an asset at the correct price. I once heard a saying where it says, you don't make money when you sell, you make money when you buy. So my partners call me a very hard negotiator, because I can be very difficult. But the thing is, once I've determined more or less what I feel the value is, I'm not going to budge off that. I might try to find ways that we can make it work. On our third deal, I got a call this morning while I was in the gym, and it seems like the seller is going to sign. And I mean, on that deal, once it's signed, touch wood, I'll do a video on that, because that's actually also a very interesting story. But I hope you guys got some value from this. Just those 3 tips. Make sure you have a due diligence clause on your deals. Make sure you're minuting every conversation, every interaction, and send that out to all the parties. And number 3, just stick to your guns once you've determined what the value of the asset is. Don't move from it. If you believe that's the value, stick to it. Don't get emotional and become emotional, because one thing I know is one can become extremely emotional, especially if you worked on a deal for a long time. You become so emotional on the deal, and you're like, I just want it to go through, so I'm just going to sign. And, you could be signing your life away on a deal that just will never become profitable. So guys, that's Aslam Du Toit. It's the Property Chronicles. Make sure you check it out on YouTube, and I'll see you on the next one.